Good morning, traders. John Caruso coming to you here for the morning of April 21st with your currency outlook for the day. First, we'll take a look back at yesterday's stock market. We did see a sizable rally. We saw a 1% move higher in the S&P 500. We also did see the June NASDAQ futures close at an all-time high yesterday. That kind of caught a lot of investors and short-term traders off guard. Obviously, we've heard about a lot of the geopolitical and political risks that are surrounding the market right now, and I just believe the sentiment in the market just got too bearish over the last few sessions, and voila, you get a big short squeeze to the upside. You also don't want to ignore what's going on the earnings from the earnings front as well. It's still very early in earnings season. However, we have seen for the S&P 500 aggregate earnings growth of 16%. It's up 16% for the first quarter. So anybody else out there who wants to spout that, stock market valuations are too rich, the market's too high, it's overbought, yada, 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 you got to point to the data. We're seeing some pretty strong and steady growth from an earnings perspective as well. We also did hear out of Washington yesterday that rumors of tax reform are moving in a more positive direction right now, but that's just kind of all hot air at the moment. Taking a look at the currencies right now, you got the U.S. dollar. It's up 10 ticks right now, 99.78 on the futures. We did see a positive existing home sales number that just came out. However, I am starting to have some doubts as to whether or not this long-term uptrend and very bullish thesis surrounding the dollar can persist here in the near future. So I'm kind of watching. There's some critical levels I'm watching in the market. 98.92, I believe, is a very critical support level for the U.S. dollar. So we're going to watch that moving forward. I still hold the trend of the U.S. dollar is still very much bullish. The near-term trade is bearish. So until we get some critical support and my trend line taken out at 98.92, I will remain bullish on the U.S. dollar, but I'm starting to have some doubts. Looking at the euro currency, 107.34 down 15 today. We did see the Eurozone PMIs in the overnight reach a 6-year high. So we are starting to see a little bit more bullish data out of the Eurozone. I think the market could be waiting for the first round of the French elections, which is on Sunday, as to which direction the euro is going to take us here in the near term. So furthermore, the British pound, big moves in the British pound. For those of you that have followed me, I have been bullish on the British pound for a long time, or at least since the beginning of the year. We are the major catalyst for the British pound, not only being growth expectations moving forward, but Theresa May, the Prime Minister, did come out with a surprise move and mentioned that she's going to hold a snap election June 8th, which is well ahead of when the next general election was supposed to be. It wasn't supposed to be till 2020. She's going to hold an election June 8th, and what they're saying is that's going to kind of strengthen her position for a smooth exit of the Eurozone. So that has the British pound excited. However, we did see in the overnight a big retail sales miss by Great Britain as well. So I believe that the first quarter declines in retail sales are at a 6-year low. So some conflicting data, but I do think ultimately Brexit, the smooth transition of Brexit will take center stage and could be the next big catalyst that drives the British pound to higher levels. So we're watching that. Once again, that general election in the UK is June 8th. For further commentary on some of the other broader currencies, feel free to reach out to me at the trade desk. My number 800-669-5354, or email me, which might be the better approach at the moment. I'd be more than happy to discuss any currency you're looking at the moment. So once again, feel free to reach out anytime. Take care.